Hello and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra. Well, it's turning out to be a session one day after the budget where we are seeing profit booking coming in on the frontline indices as well as the Bank Nifty. It's recovered from the day's low, but nonetheless still weak. So the Bank Nifty is down around 578 odd points. We have the Nifty, which is shed around 150 odd points, and the Sensex over 550 odd points. Mid-caps are the ray of hope today. So the mid-cap index is gaining around 0.9%. Advanced decline ratio has been steady and has been in positive terrain throughout. A lot of result reactions and a lot of results to watch out for. So case in point would be Federal Bank, which is reacting to its set of numbers. So that stock is up around 2% at this point. It's been a reversal from the time it released numbers where the stock was down around 1.5%, but now higher as we speak. A couple of other numbers which you should probably, a couple of other stocks that you need to keep on your radar is Bajaj Finserv, which is at the low point of the day. So that stock is down around 3.5% post numbers. Remember, Bajaj Finance already reacted to its numbers today. That stock down around 2%. And we have a couple of other big heavyweights releasing results today, L&T, Axis Bank. So all of those will be in focus. But joining us today, we have Rajat Bose on the technicals and Sharad Avasthi, head PCG research, to answer all of your queries. Sharad as well as Rajat, welcome to the show. Sharad, let's just start with you. Just wanted your quick take on Federal Bank.
Yeah, I think the results have largely been in line with expectations. We don't think that there's a very big positive or negative surprise on the results. And I think the management issue that has been an overhang for them, that's finally being sorted out. In terms of valuation, I think maybe at these valuations, there is very little upside left for Federal Bank to achieve from current levels. We would be more comfortable buying into an HDFC or a Kotak at these valuations rather than Federal Bank.
Okay, all right. What about the technicals, Rajat? How would you approach today's trading session? There's not been a huge dip. Even yesterday, there was a recovery from the lows, quite different from what we've seen generally when, big steps by the government are taken on taxes. So what is your sense?
Regarding Federal Bank, what I would say is that it has moved up considerably. In fact, I also concur with Sharad that there is little upside left. One should actually think of booking profits. Of course, there are no profit booking signals immediately that it is going to fall, but then maybe 210 to about 220 would bring in a lot of supplies. So now is a good opportunity to actually book some profits and take money home. Immediately in the banking space, I wouldn't really go for any particular bank as such. HDFC Bank, I have my doubts whether it will be able to take out 1720 or not. So that was one bank that could have been taken, but not. I'm not so confident.
Okay, wanted your thoughts specifically on the Nifty also, Rajat, before we kick off the queries.
See, regarding the Nifty, I would say that this 24,300 is the Lakshman Rekha. Today's low is 24,307. Around that level is the 20-day exponential moving average, and that moving average needs to be taken down with a lot of high volume selling. Only if that happens, you will see it going down further. And then there would be this 24,000 mark and thereafter 23,500. And so long as 24,300 is not broken, it is a course correction that you are seeing. But there are sectors where I would say, just as I said, Federal Bank, one should book profits. I would say the sectors, railways, defense, and PSU banks, I would suggest getting out of them or booking profits in them because they are looking pretty. Most of the stocks in that segment, they are showing parabolic rise. And if this parabolic rise happens, you were discussing Thyrocare in the earlier program. You know very well what a parabolic rise is. Thyrocare from 400 in 2020 to 1465 and then came all the way down back to 400. So whether these stocks fall to that extent, these railways and defense stocks and all, that's needs to be seen. But definitely these levels are not going to be sustained over the next few months. They would go for a serious correction.
Okay, all right. Some amount of caution coming in there. But let's get in our first question then. We have Muthu who writes to us from Mumbai. He holds 50 shares of IndusInd Bank, which he's bought at around 1193. He wants to know what to do, whether he should hold or sell this particular counter. So that's on IndusInd Bank. 1193 is the buy price. What would you recommend on this one, Sharad? Let's start with you.
Yeah, I think you should continue to hold. I think the bank would continue to grow at a 15 to 18% CAGR. Very recently, I think the price differential between the price to book multiples that this bank is getting vis-a-vis the private sector banks has contracted a bit. And I think as the numbers normalize over the next 1.5 to 2 years, I think that should retain back. What I'm expecting is initially at least a price to book multiple of somewhere between 1.75 to 2x on the stock. Considering that and a book value of around 1050 to 1100, something around 1075 over the next 1.5 2 years. I think the ideal target should be somewhere around 1900 to 2000. So you can continue to hold for targets of around 1950 on IndusInd Bank.
Okay, continue to hold for targets of 1950.
Yeah.
When would you expect that to probably be achieved?
I think anywhere between 18 to 24 months.
18 to 24 months. Rajat, what's your view on stocks such as IndusInd? What would your call be when it comes to the technicals?
IndusInd currently, if you look at the weekly chart, it is going in, it's going through a correction. And the levels around, say, 1250 would actually be a major support. Currently, it is 1396. If it were to fall below 1380, then there would be further fall. Only when it crosses, say, something like 1500 levels, you will see fresh gumption coming into this particular counter. I do not have any future projection for IndusInd.
Okay, no future projection for IndusInd Bank. That stock has been a bit sluggish, down around 5% in the past 3 months. Now let's get to another question. We have Hari Krishna, who writes to us from New Delhi. He holds 850 shares of Zensar Technologies, which he's bought at around 775. So he's sitting on a loss. He wants to know what to do, whether he should hold or sell this particular counter. Well, it's done well, Rajat. If you look at it on a year-to-date basis, YTD as well, it's given good returns. Do you think that one should probably just hold on and wait it out? And what would your targets be if in case there is, an upside potential?
See, I would say that in 20 months, it has already quadrupled itself. So if you ask me, I would say that at least book part profits, because here also that kind of movement is already happening. That is, a parabolic rise is happening. People are over enthusiastic. See, I'm emphasizing on this parabolic rise, and thereafter one should do some profit booking, because after the budget, what is the next lolly? I don't see any lolly coming in. Now, it will be the performance that will justify the price, or there will be some selling. So I'm expecting some kind of correction here as well. At least it may come down to something like 625 to about 600 going forward. So no buying is recommended at current levels from a technical point.
Okay, all right. Fair enough. On the fundamentals, how would you approach Zensar Technologies? Just came out with its numbers. There was a dip in the profit which took place. What's your sense, Sharad?
Yeah, I think the quarterly numbers have been a bit soft because of some issues they have faced in some of the clients. And most probably they were also talking about some furlough in some of the client accounts over the next quarter also, which is an abnormal thing to happen to them. But I think they'll continue to grow at a 7 to 8% kind of CAGR. FY26 earnings could be somewhere around 33. And I think not much upside, but I think it could easily trade at around 25x. So around fair value could be around 825. So I think what Rajat is recommending, I would be largely in sync with it, that not much upside is available from the current prices. So you could book some profits here, and if you get a price up to 825, I think that should be the price where you can fully exit the stock.
Okay, all right. That's on Zensar Technologies. We have VGuard numbers, revenue up around 21% odd on a year-on-year basis. As you can see, the stock is reacting very handsomely to those numbers. We have a couple of other mid caps which are in focus as well. But now we have K. Renuka Anand, who writes to us from Andhra Pradesh, holds 220 shares of Cochin Shipyard, which is bought at around 718 odd rupees, and wants to know what to do, whether to hold or exit. Well, this is a tough question. 718, so sitting on a huge profit when it comes to Cochin Shipyard. What would you recommend, Rajat, to a investor in a stock such as Cochin Shipyard, which is just really hit it out of the park in terms of performance? It's up around 1,300% in the past 5 years, and it's given good returns on a year-to-date basis as well, 278 odd percent. So give us a sense in terms of what you would do with a Cochin Shipyard. And whether it's prudent to probably take some money off the table now. Rajat.
Ekta, this is a classic case of that parabolic rise. Because in the recent past, I have done a lot of research on parabolic rise, be it our markets, be it the US markets, be it European markets or Japanese markets. Parabolic rise is always corrected. If you look at William O'Neill's book, How to Make Money in Stocks, he also recommends the same thing. And here, along with the parabolic rise on a weekly chart, at the end of last week, there was an evening star pattern that suggests that you must book some profits. And defense is a very difficult industry to handle, because when the government is having a lot of cash, you will get your payments. Otherwise, in the past, in the last decade, it has happened. The number of defense companies actually suffered very badly. They had to borrow, and they were on the verge of default. All these things happened at one point of time. So nowadays, they resort to QIP. And also the orders are mostly coming in the fourth quarter. So all these put together, I would say that when you are getting good money, you should book some profits. See, in the stocks, you have entered at a good price and the stock has moved up. Now, instead of feeling elated, you should take some money home. That's the time now, at least for defense stocks, railway stocks.
Okay, time to take some money home. What about the fundamentals? The PE ratios also are quite spectacular when it comes to stocks like these, Sharad. What's your sense in terms of the fundamentals? It's still to release its numbers. How would you approach a Cochin Shipyard? Do you think it's prudent to now, book some profits?
Booking some profits would be good, but I think looking at these companies just on the basis of historical PE would give you a very misleading thing to look at. But yeah, again, as Rajat was rightly pointing out, maybe a lot of it is priced in the valuation currently. I think they are doing some capex in August. Most probably another capacity is going to come on stream. Regarding the quarterly numbers, Q1 is usually a slow, slack quarter for this company. There is a seasonality impact. So I don't think Q1 will surprise you on the upside much. But I think in the long term, with an order book of around 22,000 crores, there is a possibility with the capex that they have done and the type of order flow internationally as well as at the domestic levels. There are some European orders that are scheduled to come in. There are some new rules kicking in from December in the European region also with respect to carbon emissions, etc. I think that will lead to some additional demand also. But I think, yeah, it's a real point that these industries are slow and not very linear in nature. And there could be some, headwinds in terms of order cancellation or order problems that could delay your performance. But if I think in terms of numbers that this could easily double from here, so we have seen an EPS of around 30 rupees, considering the capex that they have done and considering the international and domestic scenario, the earnings could treble, over the next 4-5 years. And I think then getting around 30 times would not be very difficult. So long term, I think easily it could be a 2,700, 2,800 stock. But then current prices are discounting 3-4 years ahead in the cycle. And I think over the next 1.5 year, most probably you will get much better prices. If you're a very long-term holder, I think it certainly continues to be a good thing to hold on. But I think when something is discounted for 3 to 4 years, it's better to take most of your money off the table.
Okay, well, we have the Petnet LNG numbers on your screen. Net profit up around 55% on a year-on-year basis, a Q-on-Q basis, and the margins have expanded as well, all the way to over 11%. The EBITDA is up around 42%, as you can see, at around 1,564 odd crores. Petnet LNG, that stock, is up around 3.5% reacting to its numbers. 1 month, it's down around 6.5%. But nonetheless, we'll take a short break on that note, but a lot more queries lined up on the other side. Stay tuned. Welcome back. A lot more queries. We have Rajat, Bose as well as Sharad Avasthi to answer all of those questions. Well, let's get to another one now. We have Praveen Kubar, who writes to us from New Delhi, holds 4,100 shares of IRFC, which he's bought at around 47.64. He's asking what to do for another whether he can hold for another 6 months or book his profits. Well, Sharad, let's start with you. IRFC.
Yeah, I think it's a unique business, mostly catering to the railways. There are no NPA issues, and there are no leverage issues also, being a government undertaking. So I think the typical things that plague an NBFC are not plaguing this company, and railways has a decent capex going ahead. So you can expect, that earnings over the next 4 or 5 years could easily double. And typically, a price to book wise, obviously, it's trading at abnormal valuation, 5.2x. But I think, considering the fact that there are no balance sheet jitters for this company, there is a high probability that this would get valued in terms of PE rather than price to book. So in that case, I think even then, if you are considering that the EPS transcends to around 10 rupees over the next 4 or 5 years, because they have grown at 10-15% annually. And I think going ahead also, they would continue to grow. They recently approved raising 50,000 crores additional debt. So I think they'll continue to grow at that rate. So 4 or 5 years, it does double to, somewhere around 10 rupees kind of earnings. And it does get around 20-25 kind of multiple. I think even then it's roughly fairly to fully valued at $200. So I think it's better to book your profits here and exit. If you're of the opinion that you'll get 30-40 times, I think then you can continue to hold. But I don't think that's a possibility. I think 20-25 times is roughly fairly to fully valued, and that's also 4 or 5 years down the line. So I think at current valuations, it does make sense to exit the stock fully.
Okay, well, Rajat, we're getting a lot of those queries on parabolic rise stocks, and I think IRFC would probably fit that bill as well. What's your sense on this particular? Rajat, what's your sense?
From early 2023, it was around 20 rupees or a little higher than that. So, and now it is 220, it touched 220 very recently. So, and at least Cochin Shipyard moves in a steady fashion. What happens in IRFC is that it moves up in spikes, and the stock that moves up in spikes means that there is not much liquidity available in the market, that if you want to buy some big quantity, the stock shoots up in a big way. For these kind of stocks, I would say that after you have made some good money, at least take some money out. At least whatever you have spent buying the stock initially, that you should get back or a little more, because when the spikes would start happening on the downside, you never know. We cannot say that the parabolic rise will stop now, so you should get out all your position. No, but then at least some profit should be taken, because when it falls, it also falls in a big way, and it falls for several weeks in tandem. The kind of movement that happens, that is very, very unnerving for any common investor. And especially after this capital gains tax, long-term capital gains tax being raised, after it starts falling, you will not be able to psychologically prepare yourself to book profits or get out of the count. So at least here, book some profits.
Okay, all right, Rajat, as well as Sharad, we're going to let you go on that note. Thanks very much for joining in and giving us all of your perspective. Well, for the markets, as of now, the Nifty is down around 140 odd points. It's maintaining that level of around 24,338 odd. And remember, it's been a recovery from the day's low, but nonetheless, there is still some amount to go in terms of a further recovery if we want to see the stocks in the green. The mid-cap index up around 1% odd. Advanced decline ratio, as we mentioned, is still holding on the advancing side, and that seems to be the key positive trait in today's trading session. We'll wait by. There are a lot of big numbers which will be releasing. Axis Bank is down 2.5% ahead of its numbers. L&T also should come up for you. It's down around 0.8%. So just watch out for all of those stocks. Well, that's all the time that we have on the show. Do remember to email us your questions. We'll address them with our experts. Closing bell up.